take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Welcome everybody to the most important day of all of our lives. It's the morning show, Stock Market TV. Spencer, Steve, JC with you. I suppose to talk about NVIDIA that reports tonight. Maybe. I don't know. But today's going to be a good show. Very excited for the show. A couple days ago, Strazza reached out and said, can we get Duality Research back on the show? If you recall, he was on the show, I want to say maybe in September. When we got him back on the show, he got some great charts for us. So we're going to have Duality Research on at 9. Very excited for that. A bunch of movers. I want to talk about Circle. I want to talk about Workday. I want to talk about, things that are moving here. It was a great day or a good day yesterday. We'll see what happens today. But that's where things stand. So if you're ready in the chat, then I'm ready. And I hope that JC and Steve are ready because we're going to bring them out right now. Whether they're ready or not, here we go.
All right.
Hey, guys.
Oh, this is the state of the markets. What's more important, the state of the markets or the state of the union?
Depends who's state of the markets.
Depends what's happening in the markets, doesn't it?
You guys watch this thing last night or no?
Yeah, of course.
No.
Was it? Of course. Was it good?
Yeah, it's funny.
I saw it was the longest one on record. So
I thought he was never going to stop talking. Almost 2 hours.
All right.
Yeah.
Anything good?
If there was a
Did he
loser,
say something to make the stock market go up? It has nothing to do with that.
No.
Oh.
If there was a loser, it was healthcare. The only group that he came after, and it was great. It was the best part, if you ask me. Healthcare. He looked right at the Democrats and he said something about healthcare, state of healthcare in America is an absolute disaster. And he goes, "You guys did this," and he talked about Obamacare, and it's true. So I would say drug prices and health insurers, so pharma and health insurers. There was some talk there, but nothing else really stood out from a stock market perspective.
Anything getting hit today? Healthcare's flat this morning.
Not really. So that's, speaks to the sentiment in the space. And then from a tariff perspective, he looked right at the Supreme Court and was like, I'm just going to do this anyway, which I think everybody expected.
And the Supreme Court's there?
Yeah, they all went.
So then how does it work? So then do they still do the thing where they have like the Republicans on one side and the Democrats on the other?
They got to stop doing that. It's terrible.
Yeah.
Is it?
That's the news of the day. The Democrats not standing or whatever, but it is what it is.
I know. It's a circle jerk, whichever way you want to spin it for both sides. So yeah, I don't know. Yeah. That's JC. I was inspired by you last night. I was like, I'm just gonna not even partake. I'm just gonna live my life and do some reading and do some emails, and I had a good night.
He honored the Team USA. It is true, Bill. Everybody knows it. He honored the Team USA hockey team. That was really nice.
That
was
cool.
Really nice.
The men or the women?
Don't even get started on that.
Why?
Women are going
man. Anyway, can we talk about the markets? We can talk about things that are up or down or sideways or all three.
Can we? Do you see the magazine cover this morning?
Of what magazine? No.
Did I all slide too?
I don't get the magazines delivered to my house anymore.
Throw it up. Throw it up. Should people really be betting on everything? The rise of the prediction markets.
That's a fair question. That's a very fair question.
Oof. Throw up the next one. This was from 2 months ago. Barron's. I was in Miami. Right? Was I in Miami? No, I wasn't in Miami. I was in Disney. I was in Orlando. I was in the airport in Orlando, just paying for some snacks for the kids to head back to Miami, and this was sitting on the counter. I was like, oh, I can't escape it. And now go back to the one this morning. So now Bloomberg chiming in also. What's really interesting is that in December, the VanEck Gaming ETF, they announced that they're changing the ticker symbol is BJK. They're changing it to the VanEck Degen Economy ETF after the close on April the 8th. Just seems to me like all of these people are betting that you're an idiot, that you don't know the difference between gambling and investing and setting up favorable risk versus reward opportunities. They just think you're a fucking idiot. I'm long discipline. I'm long real markets. Most importantly, I'm long humans who can understand the difference. These are glorified penny stocks. You understand? Even the CEOs of these companies are going out there. They're getting pranced around on TV telling you about how the market cap is so big and the betting markets are going to be bigger than the stock market. They're fucking lying to you. First of all, there's no money in these things. No money. They are purposely, maliciously using the word volume, using the word market cap to describe the volume. There's no money in these things. It's a few $100 million. It's zero. There are $70 trillion in the United States stock market. There is nothing in these things. And all these predators are hoping that you're too fucking stupid to know the difference. And my bet is that the humans are smart enough to know the difference. And this is a fade all day. At least the penny stock promoters will tell you, yeah, we're pumping penny stocks. At least they'll tell you that. These assholes are just lying to your face, right? So the penny stock promoters are actually better people than these assholes that are promoting these prediction markets. They're better people because at least they're not even lying to you.
They have big disclaimers, at least, the penny stock people.
Good. So that came out this morning. I'm like, dude, this is over. It's such a fade. There's no money in this.
Here's the thing, JC. It's not going anywhere. Doesn't mean that these are going to be tremendously liquid markets, but it's here now. It ain't leaving.
Yeah, it's nothing new, by the way. They've had these for a long time.
It's a new thing in the United States of America.
So I keep being told.
People want it is the problem. Look, I'll let you all know.
Penny stock scam with better marketing, hoping that you're an idiot.
If you can bring up slide 4, this is related to what you're talking about. So every year there's this guy Matthew Ball puts out this really great piece of research on. Really, he's looking at the video game industry at large. That's kind of the main thing, but it always branches off into kind of other areas. And this was a great slide. It's like a 150 slide thing he puts together, but this is right in the middle of it. And this is the thing that stuck out to me the most is basically people only have so much time and or attention to spend and or money to spend, right? And this slide is in the context of video games, but there is just so many alternatives to your time and your money. There's prediction markets, right? That was not in this slide deck a year ago. There's AI companion bots, right? There's sports betting, there's iGaming, there's OnlyFans, there's short form video on social media, which is like how most people spend their time now. There are just so many ways to spend time and money. And bringing it all back to the point of the report, which is that video game industry is kind of struggling right now. And this is one reason why, right? Is that there is just so much out there in the way of entertainment and competing for your dollars. So I thought this slide was interesting. It's a great report. If you go just find Matthew Ball on Twitter, he put it out last week, I think. But if you care about this stuff. So anyway, to your point, JC, yes, people are spending money and time predicting things because
imagine I logged into my I didn't believe it because I saw it on the Twitter. So just because it's on the Twitter doesn't make it true. So I saw that the Robinhood, you could bet on the Super Bowl and you could buy Bitcoin and you could buy Microsoft call options all in the same app at the same time.
I think that's sick. I think that's awesome. What's wrong with that? Isn't it un-American to not want to allow people to bet on whatever they want to bet on?
Right, the opposite. I encourage the type of behavior that helps investors blow themselves up as quickly as possible. I'm all for it.
You're not saying this
5x ETF, 10x, make it 100x ETF. What the fuck's the difference?
You're not saying this kind of activity should be outlawed. You're just saying it's stupid. Smart people stay away from it.
Yeah, JC, it's all fun and games until something becomes like a systemic risk, and then it's not so fun anymore.
This is the furthest thing from systemic risk. It's just don't be a dummy.
Well, yeah, don't be a dummy.
Understand the difference here. Understand what real assets are, what real trading and investing is, and then understand that this over here is for fucking idiots, right? Who don't know the difference. And there are a lot of people betting a lot of money that you're an idiot, right? So just don't be.
Okay. And on that note, let's do state of the markets.
Shall we?
Yeah.
All right, ladies and gentlemen, we have the Dow Jones Industrial Average, the world's most important stock market index, up 143 points today. So that's 49,380 for the Dow. S&P's up close to 1/3%. That's 69.23, getting close to that 7,000 level. We're going to talk about that in a second. NASDAQ 100 futures of 40 bips, 25,135, up 100 for the NASDAQ 100 futures this morning. You got 30-year bond futures flat, 117.5. Crude oil up 0.5% at 66. Copper up 1/3%, back above 6. Heard it here first, folks. Copper back above 6 this morning. 601 for copper. Gold up 0.5%, 5,200 for gold. 5,200 for gold, up 0.5% today. Silver, hello, $91 an ounce for silver, up another 3% on the day with the VIX falling back below 20. Falling back below 20. VIX back down to 19 for the VIX. And in funny money land, Bitcoin.
Yeah.
The original fake internet money up 3.6%. That's 2,300 this morning. 66,390 making moves. You got the ETH up 6%, 1967. ETH up 115 points this morning, pushing 2,000, getting back above 2,000, I think would be big. Solana back above 80, up 6.5% on the day. Total crypto market cap, Mr. Spencer Israel, 2.27 trillion. Do I hear 3 trillion? Do we hear it? Crypto Wednesdays.
I mean, until a moment ago, the top stock on my up filter this morning was Circle, CRCL.
Yeah, I'm buying
is
today.
it something that is the orange coin up because of something the orange man said, or no?
No, I don't think so.
No, these things started ramping about an hour before the State of the Union last night and just kept going all night long. Buy Coinbase on every time frame, in every way right now. This thing is so ready, and I like the Circle. We're looking into the Circle right now. Almost bought the Circle last week when I loaded up on different crypto equities.
Why? Let me ask you this.
Circle's like a real business, man. Let
me ask you something there, Einstein.
Mm.
What is the thought process of owning both Circle and Coinbase?
Ask me in 2 days. We're doing a lot of work on Circle right now. I don't know.
Doesn't Coinbase make 50% of all Circle's revenues?
That's what I've heard. Yes, I have heard this.
So then Circle is, I guess, a more, I don't know, it seems to me they're probably going to trade together, no?
They do.
Yeah.
It's a crypto stock. But there aren't many, like consistently profitable businesses in the crypto space. And I think Circle is one of them, along with Coinbase. So I'm interested.
It's not the same trade, though? You're agreeing with me. It's the same trade.
Let me look through the financials a little bit. Read some reports.
All right. Don't get your panties in a bunch. I got you. Go dig into your income statements or whatever.
That's right. But the chart's what's really got me interested. The chart looks fantastic. Textbook scoop and score big earnings reaction today. Gotta love it.
No, and Steve, I think the point about Circle is they are now consistently profitable where they weren't before, but now they are. And yeah, this is a business with real legitimate revenues. I mean, their revenue
Real money,
was
not funny.
$770 million, right?
You
Last
make
quarter.
real money off the funny money.
Yeah.
Listen, making real money off the funny money, I mean, that is legit. You know, I highly encourage that kind of behavior. You know, I tell my wife, because, you know, I sold some Solana, a bunch of Solana, and an NFT to buy our Poconos house. So should we like frame, you know, the monkey, you know, onto the, you know, to like remember, be like, this monkey helped us buy this house that we can have family memories with, you know?
That's good.
That'd be funny. You should. If that's what happened, that's great.
I know, but Morgan doesn't like that idea.
Put it in the man cave.
By the way,
They
there
have a man cave in the lake house. It's not like a lake mansion. It's a house.
Where do you hang out?
I mean, where do I hang out? I hang out in the living room, you know, in the main area. We got a moose. There's a moose over the dude, this moose is the biggest moose ever. His name is Bruce. Bruce the Moose.
Oh, nice.
So Bruce the Moose hangs over the fireplace, and his nose is so long it goes like halfway across the living room.
Freakishly large
Great.
animals.
It came with the house. It's not like I went and
Incredible.
killed a moose and put him up on the wall. Like, it came with the house, but I got this giant moose. His name is Bruce.
Somebody did.
I want to give him like a nose ring. He's got giant nostrils.
To bring this full circle back to circle, there's nothing I like more, or there's few things I love more than like bottom fishing in recent IPOs 6, 9, 12 months after the fact, right?
Yep. This is
Because like it's so
Right.
easy to get sucked in on like week one of an IPO. If you just wait 6 to 12 months,
Yep.
you're almost certainly going to be able to buy it for less. Almost certainly, right? And this is a good example of that. You know, you could have bought Circle in June for $200, or you could buy it today for $70.
No, I'm looking forward. I'm
Right.
actually generally curious because you know, while I'm not like Mr. Fundamental guy, I built and sold businesses, and you know, I understand the fundamentals. I just choose to ignore them for the purposes of allocating assets into capital markets. However, because of my interest in, you know, crypto, and you know, I'm in the camp as somebody who knows nothing. I think I've seen enough to realize that what you're seeing on the old block chain is ultimately the future of TradFi, right? Future of finance. So I'm very curious to see, you know, Strazza is going to do some digging. Strazza knows a lot about Coinbase. Clearly, I guess he knows less about Circle, but he's going to be doing some digging over the next couple of days. I'm genuinely curious to hear his thoughts on what he thinks about sort of what's going on behind the scenes at Circle. And if you're out there listening in the chat, I'd be looking forward to that too. I truly am, Straz. I'm not breaking balls. I really am looking forward to hearing what you have to say.
We nailed the bottom in Coinbase, and we're very loud about it many, many years ago when it was in the 40s and people were laughing at us. And maybe this situation's similar. I don't know. But I'm very interested. And then just in the chat here, Straz, I thought silver was going to crash, big dog. Was 40% in a couple days not good enough for you? Do you want more? I mean, what?
By the way, I nailed that crash to the day. I nailed that crash. And for just full disclosure, I didn't realize that the crash would be that day, but I knew it was coming in the coming days. Like, you knew, like, it just happened to be the day that we talked about it. You knew it was coming. By the way, Strazza's been poo-pooing, not interested. I'm interested. I haven't bought any of them back. Sold every single gold and silver stock going into the rally, like a week before the top, the week of the top, got rid of all of them, right? They're all there. It's all documented there. I don't own any, but I've been interested in looking to put some on. Strazza has not. Neither one of us have.
No, I probably won't be back. It's not that it can't go higher. It's I lose my edge in parabolic trends.
Yeah.
So I'll just stay away until things chill out. You know what I mean?
Not staying away. I want in, but neither one of us are in. So he's staying away. I'm interested. And right, I might buy one today. I don't know. See what kind of mood I'm in. Can you throw up NVIDIA? Why are we burying the lead here?
There are
NVIDIA.
so many different commodity stock subgroups that look fantastic right now that haven't rallied in a ridiculous, vertical fashion.
He's not wrong,
I'm
guys.
more
He's not
interested in.
wrong. Strazza's YOLOing soybeans.
No, but I do like the farm stocks. The agriculture stuff is interesting. The chemical stocks are interesting. We bought some aluminum yesterday.
All right.
So-
Don't have a cow.
Wow.
Tell me about today, guys. This the most important earnings in probably since the birth of Christ. Probably the most important release ever.
No, in all
2,000
seriousness,
years.
each one of these is, I think, a little bit less important than the one before.
Yeah, but this is a big one. Throw out the next one first of all. Throw out the next one, and then we'll come back to this. So here's semiconductors. This is the Semiconductor 25 index. The SMH, market cap weighted, highest close ever relative to the S&P 500 yesterday. Okay? Why is that so important? Well, when you look at semiconductors on an equally weighted basis, which Strazza has argued, probably rightly so for years now, that when you look at semiconductors, the market cap weighted index is really the one you want to focus on, because that's really the industry, right? It's not the little ones down the cap scale. That's probably been right, but I'm not going to ignore the equally weighted semiconductors, because especially at a very vulnerable state right here where it's either going to go or it's going to fail and collapse. And even though Strazza, I think, has been spot on in leaning into the market cap weighted version, I'm not going to ignore this, Strazza. What do you think?
The internal strength in this group is beyond impressive. I was going through small and mid cap, like semiconductor equipment names. There's still some that I've never even heard of in there. And these charts are all just zooming. I mean, they all look fantastic.
They all just zooming.
Semi equipment, memory, so good. NVIDIA and Broadcom are the ones holding the cap weighted index back. It's the big boys that need to get in line here and catch higher to the smaller ones. But the breadth in this group, just incredible. And I'm thinking more and more, especially with the action here today, this morning, NVIDIA is going to pop this coil and run. Maybe that, marks a big change or shift in sentiment for the entire Mag 7 or the mega cap growth trade. You got to see these Mag 7s get rewarded out here. Maybe NVIDIA starts it, I think.
So you think NVIDIA becomes the first $6 trillion company?
Yeah, but I've been thinking that.
Before St. Patrick's Day. That's what you're saying?
NVIDIA is going to continue to be the largest company in the world until their growth slows.
NVIDIA, $6 trillion before St. Patrick's Day. Yes or no?
I don't know. What's it at now?
4.8, 4.7?
Yeah.
Wow.
Yeah, because you're going to get a nice leg up here. Thing's been sideways for so long.
It's going to take a 25% move roughly to get it to 6 trillion. What do you think about that?
Look, I think it's going into the low 200s. Whether or not you get 25%, I don't know. You need like 250 for that?
240, 250.
Yeah.
How about this one, Strazza? Throw up slide 7 there. This is a big one here.
Yeah, nice.
Right? So small cap technology right now, small cap technology came within pennies of an all-time high close yesterday and is hitting new all-time highs, new multi-year highs here relative to the S&P 500. Small cap tech, the leader, small cap tech. So when people are like, oh, technology stocks are selling off, just to reiterate to everybody at home, it's the little ones that are doing that. It's not the big ones.
That's right. Big ones follow, you think?
It's just historically, it's usually the opposite at tops, right? It's usually these mega caps, just places to hide. At the end of the rally, you saw it in 2021, at the end of 21, right? A lot of this stuff has already been falling apart. It was just the megas, and then the megas caught down, right? This is the opposite. It's the megas that have been struggling. They're not so much going down, but they stopped going up in October. And then the small caps have continued higher, and the mid caps have continued higher, and semiconductors have continued higher. So internally, there's just a lot of strength in the face of, the indexes sort of masking that strength.
Yep. A lot of that is probably those semiconductor companies, the mid and small cap semiconductors that I'm talking about. Less than software, I would say.
We've got a special guest here today, guys. Someone whose work we appreciate a lot. What do you say? Bring him out.
Doesn't write science fiction blogs, facts only. Really good stuff. Looking forward to
Science
listening.
fiction blogs. That's a thing now.
Apparently.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Alex.
Hey,
What's going on,
thanks for
Alex?
having me
How are you?
back.
So the reason we had Alex on today, we did something we don't often do on this show last week. And we were talking all about valuations and PE multiples to the point JC couldn't take it anymore. And Alex pinged me and he sent some charts that I thought were absolutely great and really just expanded on the discussion we were having. So I said, you got to come on and talk about it. So thanks for being here.
Sure, of course, yeah.
You want to like fill everybody in kind of where your head is at with that conversation we were having? Did you send along some charts? We'll throw some charts up.
Yeah, I did send some charts. Maybe if you can, pull up the first one.
Chart one?
Chart one, exactly, yeah.
There it
So
is.
basically showing, since 2000 on the top forward PEs for the S&P 500 and on the bottom forward profit margins. And if you look at it just from this perspective, it does look like the market is rewarding higher profit margins, right? And what I basically show here, because what we tend to hear, especially on TV, is the market is expensive compared to the 10-year average. But the thing is, like, comparing today's multiples to their 10-year averages implicitly assumes that the index earning structure and risk profile haven't changed over the years, right?
Yeah.
But they clearly have, and especially with how much the sector mix in the S&P 500 has shifted. So today, 21.5, 10-year average is 18, basically 19. And but at that point, over the 10 years, you're looking at a market that averaged 12.5% in forward profit margins, right? So I think higher profitability demands a higher valuation premium. So what I simply did is, if you go to the next chart, I simply plotted, forward PE ratios against profit margins here, right?
There you go.
And as you can see, as you showed on Monday, you can definitely see a relationship here. You have an R squared of 64, basically. So the whole trend line explains 64% of the variation. And and you can see that today, actually, we are below average, right? So
Yeah.
with my model, it's saying that valuations are below 20-year historical averages here, right?
You could say stocks are cheap at this point.
Considering the profitability, yes.
This isn't a new story, right? Like, you've zoomed out on this chart 20 years. So this expanding margin driving higher multiples has been a story for a long time now. This is not like a brand new thing that just came with this big AI boom. It's been going on.
No, it's the same thing we do with stocks, right? I mean, it's normal that tech stocks have higher PE multiples. Why? Because they have higher profit margins is the first answer that usually people tend to give, right? So what is interesting here is that I basically created those 5-year buckets with different colors. And you can see that there's this cloud above there where we saw valuations reach roughly 4 standard deviations above the long run average. And if you go to the next slide, it's obvious that that was the lockdown period. So in this chart, I basically connected all those the path from the dots so that you have the timeline in this. And you can see it was a 1-year period, April 2020, April 2021, when there was a lot of money around, low interest rates, and people had a lot of time, right?
Oh, that's cool. Look at that.
So
how long did that persist for? Just a year, basically?
Yeah, it was a year. And then yeah, so then coming into mid 2021, because remember, most stocks actually peaked in February of 2021, right?
Yes.
So those that actually were where we were seeing the excesses, there those peaked and started to go down, and then the market really rolled over in beginning of basically on the first day of 2020, where we saw the all-time high.
Yep. This
Right.
is, if you go back, I mean, this is just such incredible chart work. Good for you.
Thank
Did
you.
you come up with this on your own, like the idea to chart it out this way and break it out by the different time frames?
Yeah, I did. Yeah. So then what when I saw this relationship, I used the information from the regression and I adjusted it, right? So if you go to the next slide, I do show here the adjusted, so basically my model adjusted forward PE ratio, and I show in the back the PE ratio of the S&P 500 as well, right? And what has helped or what has driven the adjusted PE ratio down recently is we have been going sideways for 17 weeks now. Earnings continue to grow and margins are almost exploding higher. So that's why we basically came down from 18 times to below 16, right? So
If I'm looking at this correctly, it's almost like just from the bear market lows a couple years ago, profit margins looks like 250 basis points higher.
yeah,
That is a significant increase in a very short period of time.
exactly. And the main driver is obviously the semiconductor space, right?
There you go.
I think it grew from 2% to 6-7% of the no, sorry, a lot more. Semiconductors are 15% of the S&P 500,
Yep.
and they are at 44% forward profit margins.
Wow.
So this could also be right the headwind that people will say, okay, this is very cyclical business.
Yep.
Then on the other hand, they are telling us that, hey, look, these companies are gonna get their order books filled until
Right.
2030 at least. So let's see how this will mess with the cyclicality of those companies.
Yeah, they
Right.
can't keep up with demand. What does that do to the cycle? I mean, shout out semiconductors. We just took it full circle, in the first 30 minutes of our show here today. Talked about the technicals, how these stocks are just absolutely killing it, even down the cap scale, these semiconductor companies, best looking charts in the market from a subgroup standpoint. And then there's the fundamental story that's driving it.
Yeah, exactly. Yeah. So if you go to the next chart, next slide, this is sort of an exercise I like to do, and this is what I did coming into the year. So in a sense of like, how can we use this, right? What I basically show here is, so by the end of 2026, we will be discounting 2027, right? The next 12 months. And estimated profit margins by then for 2027 are 15.8%, right? Now, instead of giving my readers a target for the S&P 500, the exercise here I do is like a typical up year is 17%, okay?
Yep.
So that brings the S&P to 8,000. Now, it's a bit small here on the top left, but if we simply assume $350 EPS estimates for 2027, and we think we're going to land at 8,000, this brings us roughly to 23 times forward earnings by the end of this year, right? And as you can see, this would be still below the trend. I think this would be below the trend line, right?
Really?
So the
Wow.
market wouldn't be that expensive. And I'm assuming 350, but EPS right now is 360. Right, so I'm even being a bit conservative. So you can play around with this matrix, and to show the opposite, the typical down year is minus 13%, would get us slightly below 6,000. If we still assume 350 dollars forward earnings, we get to 17 times earnings, and you can see this would be super low. This would be like lower than most of those market bottoms, right?
That would be cheaper than anything we've seen in several years.
Yeah. So what it tells me doing this exercise is we will only go down 10% if something happens to forward estimates here. Like we would need basically to crash into a recession, right? And that's
But
not
I
our
mean,
base case. So
there's no signs of that right now. Correct me if I'm wrong, but earnings growth continues to be incredibly strong, robust.
yeah, I mean, it's almost the opposite. Like it's
Yeah.
like we're seeing a reacceleration in a lot of things that we track, right?
Yep.
So if we go to the next slide, like I said before, the S&P 500 technology sector is what has really been helping the S&P have such high profit margins and everything. So what is interesting right now is that the S&P, the technology sector, is basically back to the same weightings it was right when we topped out at during the dot-com bubble. So roughly a third of the S&P 500.
Wow.
But since then, profit margins have more than tripled, and tech stocks continue to stay in this consistent 14% annualized earnings growth trend. Right.
So is the profit margins here? We're just looking. This is the profit margins for S&P technology. And the
Exactly.
ETF estimates. Yeah. Yeah. So you could really, if you wanted to, you can make a very strong case, sound argument that tech stocks are ridiculously cheap right now.
Basically, yeah. Yeah, I think so. I mean, obviously, everyone will say, well, we don't know what's going to happen to software stocks. But generally speaking, that is somewhat being offset also by hardware and semiconductors right now.
Yeah.
Right.
Are you drilling into the actual subgroups, because you are hearing that margins are being compressed in software?
Yeah, I
Not
took
saying
a look. I
it's
mean,
the same, but
they're sort of going sideways for the
okay.
last 6 months, right? So you could say that maybe it is already getting incorporated, but because the rest hardware and semiconductors have continued to see forward margins increase.
Yeah.
So it's a bit early to say, maybe, right? But I think what is interesting, if you go to the last chart, the next one, is that it's been exactly 17 weeks, 80 trading days since technology peaked on October 29, right?
Yep.
And the S&P closed yesterday at the exact same level. It's up 0%. It's flat. And obviously being exactly offset by everything else, S&P 500 X tech. But when we go back and think how technology has been this positive driver, right? This is also causing the market to really become a lot cheaper, a lot faster, right? Because I mean, technology gave up 10%, and the rest that has lower margins and everything has offset that, right? But actually, you still want to have that good ingredient in there, right?
What do you think? You think NVIDIA can turn this thing around today? You got this consolidation pattern here in tech. Looks very similar to the one in NVIDIA. Tonight's going to be a big night. Something's got to kind of turn the sentiment for this whole group, I think.
Yeah.
But you do have this big consolidation. When you zoom out on a chart like this, you have to think, this consolidation probably resolves higher in the direction of the underlying trend and with the broader market, like you're talking about.
Mm-hmm.
You think NVIDIA's report could kind of be the catalyst to kind of kick that off?
I mean, definitely could, right? I think the most funny outcome would be if technology goes up in the next, let's say, 3 to 6 months, 10%, and the rest of the market goes again back down 5.5%, and the market still stays flat, right? I think that would mess with a lot of investors, right? That are especially passive invested only.
I think odds are high that could happen. You look at some of these other groups that, they've been cruising. A lot of them are extended now. Everybody's getting all bullish on the value and everything X tech. It's exactly the moment, market likes to fool everybody. Flip it back to tech for a little while.
Exactly.
I think that would make a lot of sense. These are such killer charts.
Thank you.
Alex.
Thank you very much.
Absolutely love it. Are you, when you drill into other sectors, are you seeing anything else stand out in any of these other groups? I know a lot of these commodity stocks are getting hot now. They have interesting kind of business models where they flip from unprofitable to profitable overnight. Are you diving into some of the materials or energy stuff?
Yeah, I mean, back then in September when I was here, I was already sort of looking at the whole broadening thing, also with small caps. Right now, I think it has really become challenging to read this market, right? Because you see at the same time semiconductors ripping, but also staples. Then again, you have all those risk appetite ratios rolling over. But when you look at the risk on thing, for example, discretionary equal weight, or for example, high beta, they are actually still trending higher. So you can't just see it as that's risk off, right?
Right.
But then we have financials this week. This looks doesn't look good. But I think just in general, what the last chart showed, the whole rest of the market keeping everything flat is just by itself, in my opinion, a bullish development, right?
Yep. And hey, I mean, financials doesn't look good, but we see this all the time where it looks like a top. That second it looks like a top,
Yeah.
they reverse it higher and ended up being a beautiful failed top, nice continuation pattern back off to the races. So that's got to stay open to that, for the coming days as well.
Yeah, absolutely. Like a classic bear trap, right? As long like when the index is still above the 200 DMA, so wouldn't be that surprising.
Good stuff. You got questions, Spencer?
Well, to echo some of the sentiment in the chat, great stuff, Alex. But it sounds like to me you're kind of just saying, yeah, just buy it all, right? buy everything and don't worry about it. But I wish it was that easy. So
Exactly.
yeah. The chart you had about here, which number was it? Was it 19? Rick. You
got some fans in the chat, Alex. You got some customers in the chat.
That's good.
Awesome. The top pane on slide 19, if we can bring that back up, the technology weighting in the S&P.
Yeah.
This is, to me, of all the things that you shared, kind of the most interesting for me right now, because so much, everything that's about tech is all about the massive overweighting that tech has in the index, right? And so now we have, I guess we're at, I'm not sure how far back. This is going back 25 years. So okay, yeah. This is the whole century. So with the exception of, it looks like 2022 there, that low where we got below 30%. This is kind of the most prolonged period of time that we've had in really quite a while, where the weighting has gone down. The weighting of tech in the index has gone down. I guess, how do you think about that?
I mean, look, if you look what happened in 2018, they took out Google, Meta, and a couple of other stocks. Like, I
love how you labeled that.
If you still incorporate those, I think Bespoke recently had a good chart. The technology sector would be close to 55% or something like that.
Jesus.
Right.
Well, good thing they did. So now they don't count as tech anymore. It's great.
Yeah.
Wonderful.
That's why they did it.
Wonderful.
Yeah, it could really be, right? So yeah, I mean, technology is becoming every day, a bigger part of our lives, of the market. So just accept it that the PE will continue to go higher, and it's backed by profit margins, in our opinion. And if you still want to go on TV and keep blaming that, the market is expensive compared to the 10-year average, all right, be my guest. Right, I'd say.
Yeah, it's just nothing like it was back at the .com bubble. These companies are just built different. This is incredible. The EPS growth, the margin expansion, phenomenal.
Exactly.
Special group of stocks, really.
The bottom panel really says, on average, if tech stocks didn't go up 14% a year, they got cheaper that year.
Right.
So it's a win-win, basically.
Yeah, well, explains a lot when you look at it this way. Explains a lot of the leadership and outperformance.
Either they're making more money or they're getting cheaper. Either way, you win. So
exactly.
Yeah, this is great. No, I don't have any questions other than just to say these charts are fantastic, and Steve Steve, like I said, Steve mentioned a couple days ago we should get you back on the show, and very glad you can come on this week because
Yeah, absolutely. Thanks for having me.
Very timely. How much attention are you going to pay to the NVIDIA report and then reaction in the next few days?
I mean, obviously a lot. I just don't like it when we put so much pressure on one name and think that without it, we're gonna crash. I think a good thing is that it's trading, sort of that upper range that we've been. So if there would be some sort of miss, I think that there's no structural damage to that chart. And the earnings not the earnings expectation, the expected move is quite low, to be honest. I think less than 5%. So I was surprised by that. I was expecting more like 7 to almost 9%.
Throw up the earnings scorecard. It's because the reactions have been muted for 4 or 5 quarters now. Different from what we were seeing back in 23 and 24.
That's a good point. Yeah.
So, but it's not to say that it can't do 15, 20% like it used to. It's just that hasn't been the trend recently. What do you think, before we let you go, software is the big debate in markets right now? You pointed out, margins aren't really being compressed and we're just sideways stalling out a bit here. Certainly feels like investors or the market is forecasting that maybe they come down. But these stocks, I mean, something like Adobe, almost 10 times earnings, are really getting historically cheap, cheaper than they've ever been over the lifetime of these companies. Are you interested in the space? Do you think more selling, is coming? Or do you think like we're pretty much there? These things are cheap as hell. Where's your head at with the software?
No, I think they'll recover from here. I do believe that. I just think that they will have some sort of like overhang, like a discount for the next, like really for the foreseeable future, right? And most likely during that time, we will start to see really the winners and or the ones really affected and the ones that aren't, right?
Because right now they're all being treated as losers for the most part. When the truth is that you're probably going to look back 5 years from now, some will be completely disrupted and maybe even gone. But there will be others, probably the Microsofts and the Salesforces of the world, that were just fine and then just got really cheap because of a brief market dislocation. And you'll probably be really glad that you put them in the IRA today.
And they're all saying the same thing. They're all saying, we're implementing AI into the business. AI is a huge growth sector. They're all saying the same exact thing. So it's hard to know who's full of it and who's not, right? Because
Daniel says he's putting these charts on his Tinder. It's really the greatest compliment that guests get when they come on our show. So that's a big deal, Alex. Really nice.
Thank you.
Nice.
Yeah, Alex, I want to give you a shout out to you. You do have excellent charts. Like seriously, you really do. Yeah, I pride myself. I've looked at a lot of charts in my day. I've met a lot of folks over the years around the world that put together nice charts, and you're definitely well done, sir. Great.
I appreciate that.
All right. Well, I just dropped the link to Alex's Substack and his Twitter in the chat. Check them both out. Duality Research is the name.
Let us
Alex,
know. You're in Zurich, right, Alex?
Yeah, exactly.
Sorry, Spencer. Yeah, let us know when you're in New York. We'll get together.
Cool.
Definitely. Let's do that.
I know a few places there.
Thanks, Alex.
All right. Thank you, guys. Bye-bye.
The thing about charts is it's not squiggly lines. It's not voodoo. The beauty of a chart, it really tells you, it tells a story, right? It tells you what is actually taking place, right? And to do it in a way that you could visualize it, for a lot of people, myself included, that's the way that I learn. That's the way that I understand things. I got to see it. Not everybody's like that, but I feel like a lot of people are. So the fact that he's able to tell those stories that might be different stories that I'm telling in a wonderful way does great work.
Huge fan. Love the way he views the market. Really holistic approach. Made some great points. Really good stuff. We'll have him on again soon.
All right. Can we talk about the beat report? We have some beat report scorecards from yesterday, I believe, in the deck.
Nobody wants to hear about anything except for NVIDIA, Spencer.
That's not true. Our audience is
bring it out. What do we need to know, Strazza?
That's not true. People want to hear things. Let's talk about it.
So the one that really stands out today, if you want to throw up the beat sheet here, can I get
We
a
got
little
some good ones.
boom? What a beautiful table this is. So what we're doing here, just left to right, we have price trend data, a little line chart above, tell you what the company is, and then you want to look at the green and blue, or the green and yellow and red column. Right, it tells you if the stock beat or not versus the street estimates. Then you get like the standard actual versus estimates, and then you get the reaction, actual price reaction in the earnings session, and then our proprietary reaction score. I love to see when the market treats a stock maybe the way it shouldn't have, right? Shouldn't have. Be careful with that. And if you go all the way to the bottom of this table, one really stands out from just recently. Beat the expediters, JC. Shout out transports.
Yep.
Market hates it. What's going on there? Double beat and one of the worst reaction scores in I don't know how long. Throw the chart up. We got it marked on the chart in the expediters. Oof. And if that little base breakout fails here, nasty, you can't own this below 132. So this was actually the worst earnings reaction in about 13 years, 12 or 13 years. So not good. I don't know what the hell's going on over at Expeditors, but this would be a stay away. Too much stuff working in transports by a name that's clearly struggling and that the market just doesn't want right now. Probably AI fears, if I had to guess.
Yeah, I was gonna say.
If I had to
You
guess.
think? Yeah, all these logistics companies, right?
So that's the Expeditors. Another one that, excuse me, stood out was Keysight. Keysight. I remember when we made that like 5G list 100 years ago, JC.
Oh yeah.
I'm in.
Beautiful base. This one was a big buy just north of 200 coming out of this base, and the reaction rally it has enjoyed coming out of this beautiful technical pattern. Just great. And now earnings are pouring it on, acting as a catalyst, send the stock even higher, up 23%. Best earnings reaction ever. They can't get enough of the Keysight technology right now. Great chart. Checking all the boxes here.
I'm long. What do they do?
I don't know. Communications?
Yeah, communications. Yeah, all right. I like it though. I don't know what they do, but I'm into it. I'm into it.
They should do
apparently more of whatever it is they're doing. They should keep doing that.
Great look. This is what you want to see, in uptrends, is your stock coming out, beating, and the market just loving it.
Yeah. It's better than the alternative, right?
Yeah. And then if you just want to wrap it up with the NVIDIA scorecard, if we have that, look, like Alex just pointed out, the expected move, very low, very low. If you had to own calls through an NVIDIA report, this might be the one. I'm not saying to do it. I might have some myself. But I think we get a beat and a boom.
A beat and a boom?
A beat and a booyah this afternoon. Yeah. I think something's got to give here for this whole theme.
Does something actually have to give?
It would make sense for NVIDIA to kind of be the one where the market's like, okay, all right, this tech sell-off, that's enough. Back to business here.
Yeah.
Yeah, look at this. Very just nothing burgers for 1, 2, 3, 4, 5 quarters now. So, and then remember, if you go down to the bottom of this table, what was happening in 2023, the greatest earnings report of all time in May of 2023, 25%. A couple quarters later, 16%, 10%. So it's not that it hasn't been done. It's just been a while. It's not that the reports have deteriorated or the financial performance has deteriorated. Still growing at absolutely, unbelievable rate. We just need the market to like it again. I think they will. Or you could go pay 30 times for Pepsi.
Staples, I'm hearing, are very
buy Pepsi
expensive.
for 30 times earnings.
I saw on the internet. The internet
1.5% growth rate.
Staples are historically expensive. These multiples now. Is that true?
Staples, it's ridiculous. And I love my Staples stocks. I got some that I've had for a long time, and I'm looking at my Coke stock like I'm gonna have to sell you.
Boomer.
But the dividend.
Strazza's like a boomer at heart.
It's not enough.
A millennial out on the streets, but a boomer in the sheets.
Couple movers, headlines I want to discuss briefly. Big gainer of the day so far, at least, is for me is Clear, YOU. I'm gonna have to look into this earnings report. They reported this morning, I think. It's up 20% here. There's got to be some read through there into consumer spending and air travel if Clear is up 20% on the earnings report. So I want to look into that. Can we bring up the chart of PayPal?
I was doing some.
Speaking of-
I was doing some boots on the ground fundamental analysis,
Unclear.
and I was doing some clearing at the airport. You know,
Yeah.
you stick your eyes, your eyes in there, and then under in the thing it said Big Bear AI.
Yeah, the BBAI. Yeah, you
Yeah.
see it all the time in the airport now. Yep.
Saying,
Speaking of airports, I think I'm going to Las Vegas for the first time in like 15 years for a couple days. I'm going to see the Eagles at the Sphere.
really?
Yeah.
I hate the fucking Eagles, man.
It's not. I saw the Eagles back when they were all still alive, and
I saw them about 15 years ago as well. Yes, rest in peace, Glenn Fry. But they still do have most of the original members of the band, and I think now Glenn's son. Plays Deacon.
I didn't know
Dude,
that.
anything at the Sphere's worth seeing. They're watching the freaking Wizard of Oz,
Right, that's
100-year-old movie. They're watching at the Sphere. I mean,
That is
So that's
true.
what
Yeah.
I was thinking. Do I want to see the Eagles or the Wizard of Oz? I think got to see
when
the
are you
Eagles.
going?
They are
I'm going
getting-
next month. I'm going in a month.
Wait, speaking of the Sphere, have you
Eagles
guys seen
beat
that?
When are you going to
Sphere's
Vegas?
looking great.
Last week of March.
So am I.
Are you serious?
Yeah.
We'll be there like the 27th to the 30th.
Oh, I think you might be going a little after me. I think I'm going slightly before that.
We're gonna be playing golf. Going with one of my golf buds. It's gonna be a blast.
Okay. Couple more things.
We're gonna
Can
go
you
to
bring up-
Marco Island. And
I'm
we're
going
like,
the
Vegas.
23rd, 24th. I'll be there.
Oh, just gonna miss you. Cool.
Can we bring that PayPal chart back up? It's been a great week for PayPal. M&A rumors. Apparently, Stripe has expressed interest in the company. So this got it. The first pop was like a couple days ago, right? And then it kind of gave a bunch of it back. And then yesterday, like right at the close, this report came out that Stripe was sniffing around. So been a tremendous couple of days for the stock. Probably just a ripe target to buy on the cheap. This was a $300 stock after COVID, and obviously you can see what happens since then. So kind of a mess, but hey, great week for PayPal. I wanted to mention the Clear. We did that already. First Solar down 19%.
Yeah, killing the First Solar, man.
The Kava on 15% on that earnings report. The Workday was interesting. The Workday report, they're killing it. They're killing Workday, right? And they said all they could say, which is like, yeah, we're bullish this year. We're bullish AI. It's helping our business. Doesn't matter. It's down 10% this morning, right? So
Crypto. Coinbase, baby. All right. Let's do a recess and get out of there. Fast market.
do recess and get out of here. Okay, let's do recess. Anyone in chat, you have a recess?
I made the butter, the homemade butter.
Yeah. You like?
Churning butter.
Yeah.
Churning butter. Yeah, I
You like?
I used
garlic?
the machine though.
What do you put in it?
I did. I just salt. Just you got the base butter, and then you could do whatever you want with it. I did an herb butter. I had some sage and some rosemary for the steak. But yeah, throw up the machine there.
Don't you live near Amish country? That's what they do.
Yeah, they make good butter, JC.
I actually don't live close enough to the Amish. I really truly wish that they were closer. They're far. They're like in Lancaster, bro. This shit is far. I wish they were closer. They come up to the Poconos and they do the whole thing. I love these Amish people. I mean, they are the greatest. They are the greatest people ever. They give me so much delicious things, all kinds of stuff. So you put it in the thing. So this is 2 pints of heavy cream. So I had Morgan I specifically asked for the bougiest heavy cream that she could find, right? Because like if you're gonna make butter, you want higher quality, right? Not like the rando. So I had the heavy cream. You mix it up. So I thought you needed to churn slowly, and like 20 minutes went by and nothing happened. It's just liquid, just spinning around. And I said, I'm thinking I'm not doing this fast enough. So I turned up the machine. This machine is scary, man. I'm gonna lose a finger with one of these things. I don't know if you have one at home. I don't recommend it. These things are dangerous. So you put it up to medium, and this thing's going, wah! Dude, next thing you know, we're churning butter. And then look at this thing. So I had like a freaking log of butter. Here, throw up the result there. So then what you do is it separates like the hard part with the juice. So then you get buttermilk, and then you get butter on the spinny thing. And so you wrap it in the paper and then go to the next one so you can see what it looks like. A nice little yellow, right? You harden it up, and then I put a can next to it so you can see just how much butter I got for 2 pints of heavy cream. Look at all that butter.
And is it good? Have you tried it? Looks
Yeah,
awesome.
it's awesome. I mean, it's like, I'm not like a butter expert, so I don't know. I mean, it's something to do with the kids on a snowy day, like,
Oh, I was going to ask you why. Like, what is the purpose of this? Like, how much butter could you possibly eat?
Well, I'm teaching my daughter's 5, so we talk about science and like liquids and solids, and like, so she sees like she's seeing like what was heavy cream turn into buttermilk and butter, and then it's liquid, and then it hardens. So there's just a lot of science lessons, and it's snowy, and you got to entertain kids, so we're making butter. Remember the other day we were talking about this, and I got an email from somebody who watches the show. Shout out to Mike, telling me how easy it is and how simple and delicious it is, and it was. Just add some salt, and then I took some of it and I made an herb butter for the steaks, for the ribeyes, with some rosemary and sage.
Yeah.
Wow,
that's great. Might have to try this at home,
dude. Do you have one of those doohickey machines?
Yeah, they're really heavy.
They're very heavy. They're very heavy. They're not for girly men. Very heavy, and you got to watch your fingers, man. Those things are scary.
Yeah,
I don't use it, but we got one.
I also don't touch ours.
Vegan butter, no.
Vegan butter? No, that's un-American. No. What even is that? No. I want my butter.
I don't know.
I want my butter coming from a cow.
All right.
Let's get out of here. Here's what we got.
UConn, huge game at the XL Center, or whatever the hell they call it these days. If I was in Connecticut, I would be in Hartford tonight. Let's go Huskies. Got to win this one.
Steve, I don't know if you've noticed this, but every time you talk about a big UConn game, they lose.
Shut up, Spencer.
Have you noticed that?
Yeah, I have.
Okay. I've noticed that too. I'm just saying. Okay. What's going on today? If you are a member of the Mackie portfolio, you'll get Jeff's latest options trade today. Strazza going live at 11 for the Beat Report weekly strategy session. Lots to discuss. Jeff Mack is going live at 1 o'clock on YouTube to talk the latest tariffs and the impact there on retailers and what we can learn from last April. NVIDIA earnings report at 4. Should we go live at 4 for the NVIDIA earnings? I think maybe we'll go live at 4. So. And then Riley going live at 5 to digest the earnings report after and give his take on all that. So that's what we got going on today. Thanks for watching. Thank you, Alex. Thank you, chat. Drop us a like if you're watching us on YouTube. Go make some money. All right.
Adios. Later. YOLO response.
I can't take no loss.